right. Hi, everyone, and welcome. I hope you're having a great DSS. I'm particularly excited about this next session. We have Targ Patience from idclear, and he's going to talk about centralized AML, anti-money laundering, and regulatory due diligence for cross-border finance. Very exciting topic. Targ, over to you.
Thank you very much, Sudha. Yeah, it's exciting to some, definitely exciting to me. So thank you for the kind introduction. My name's Targ Patience. I am not a thoroughbred technologist, but I've spent around 20 years in financial services, working closely with regulation and a lot of implementation of very technical things. So have worked very deeply with technology over the extent of my career, never so much as the last 4 years. So our business is idclear. And it's been very much inspired by principles in financial markets of centralized risk management. Earlier in my career, I helped to design a clearinghouse, a central risk management infrastructure for derivatives risk. And that's obviously come not only into the way that our business and product works, but also the name, idclear. So we are dealing with regulatory due diligence, often known by many things such as KYC. So let's talk a little, first of all, about what that means and the data. So a common misconception that many have around due diligence is that the financial markets or regulated business is somewhat akin to a nightclub where you show your passport and you're just through the door. What they don't realize is the huge processes that need to take place behind the scenes, which is what we're addressing with our product and service. So to talk around that, to give some context to the data needs and what we're dealing with, in that process, the first is information gathering. We all will have opened a bank account or a credit card, got insurance, either as an individual and also maybe as a legal entity. This is where you're providing documents and data, which then needs to be verified and assessed. In today's world, most onboarding happens remotely. And so that verification takes the form of a lot of computer vision is used to check that someone is a living, breathing human being, known as a liveness check, scanning an ID document, again, AI looking at reference images, identifying all of the security features. This all forms part of the data that we need to capture and maintain as part of the records. There's then identity screening. This is really, is someone on a terrorism watch list? Are they known to have political exposure and be subject to potential corruption? Or is there adverse media that's been published, say someone having been arrested for fraud? And there are defined offences, predicate offences to financial crime. 230,000 news sources are screened by us to identify potential matches. A lot of that ends up being a false positive, but when we get a false positive, that still needs to be investigated. The results of that investigation and the decision on it needs to be maintained as part of the record keeping. There's then calculating a risk. Regulation defines how that needs to be looked at. There's then ongoing assessment. When you're doing a screening, someone may not be on a terrorism watch list today, but if they appear on one in 2 months' time, you definitely need to know about that. And then additionally, there's activity monitoring. Is that commensurate with what you've understood from all of this aggregated data and verifications of who this person or counterparty is? And every time a payment gets made, screening needs to be done to ensure it's not going to or from a sanctioned person or someone involved in illicit activities. So there's a bit of a quick briefer to all of the data management challenges that you have around compliance with due diligence. So looking a little at numbers, a key thing here is the astonishing expense of complying with the regulations that are set around financial crime. So by 2022, it surpassed $250 billion. So $274.1 billion was spent just in traditional financial services on compliance with AML. In Europe, the average mid to large financial services firm is spending $52 million per year. About half of that is on people, because you have all of this data management, all of the investigations that need to take place. There was a study done by the Bank of England, had a task force called the Post-Trade Task Force. They looked at due diligence and identified that up to 105 separate pieces of documentation needed to be provided by funds and complex legal vehicles when being onboarded. So globally, it takes an average of 2 months to open a bank account as a result of this for illegal entities. We've estimated that more than 750 billion AML transactions are being conducted annually. Again, that seems preposterous in relation to the whole human population. But again, going back to the previous point about every time a payment is made, screenings need to be conducted. And again, think of the data requirements of all of that needing to be maintained and auditable by financial regulators. So, idclear. What is our service? How does it work? What's the principle behind it? So the first thing is multi-tenancy of data. So if we look at the current world, we've got customers and we have businesses that want to do business with one another and establish relationships. So currently this is very bilateral. With every relationship, data, documents are exchanged, and then those verifications need to be conducted. It means they're done over and over, and sensitive, high-risk documents and data are sent to multiple different parties who, let's not kid ourselves, manage that data in very different ways. Some physical records in boxes, some in people's hard drives, and going up to very, very complex and well-encrypted cloud infrastructures. The difference with idclear is you still have the people and businesses that want to engage with each other, but idclear as a service interposes that. So the data and documents only need to be shared once, and then each party that they want to onboard with gets access not only to that data and documents, but all of the compliance metadata attached to it. Why this matters? So we have a significant reduction in the proliferation and distribution of high-risk data. Obviously, identity fraud is a massive challenge. It's a huge risk. And again, the way that data is managed in many places leaves certain things to be desired. It also reduces the repetition of these processes. Again, that 2-month average time to onboard with each party, by providing multi-tenancy to the data, enables real-time onboarding. So that gives huge improvements in risk detection, the ability to take mitigating actions. The analogy I often use around due diligence and going through it is traveling internationally. Right, we all go through airports with varying frequency, and it's kind of like being processed into a maximum security prison. That process is to catch this vanishing minority of people who may be carrying a weapon onto a flight, but we all have to go through the same thing. And it's somewhat similar when we're opening new relationships with regulated entities. It also gives a much higher consistency, transparency, and efficiency of compliance. By gathering that data in one place, we're much more effective at finding that small minority of high-risk activities and players. So I'm now going to just talk through interacting with idclear, so how our service operates, and a bit of a discussion around the data processes there, the data flows. So if we have what we refer to as an end user, so this could be an individual, or they could be onboarding themselves as a legal entity with a client of idclear. So say they're doing this online, they can go to the client's website. There's a widget embedded in there, which takes them through us for questions and data. So that's a dynamic process fed from our reference data for what information needs to be provided in which circumstances based on different data that's provided. And that all comes through our data store, which I get onto in some detail a little later on. We then have various pieces of what's known as RegTech, regulatory technology, to do all of those screening exercises, checking names against adverse media, watch lists, verifying documents. And within that, you get alerts. 95% of these are known as false positives. Someone has a similar name to someone who is on some sort of criminal watch list. And that generates a case within our case management system. We then have AML experts who triage those alerts. So this gives that compliance metadata that we can mutualize. The client then accesses the data and all of that's both their customer data, the status, all of the risk information through a secure client portal. Once anyone has been through onboarding, they then get access to the end user portal. So they can see what data they've shared, with whom and when, and have visibility and control over that. If that end user then wants to onboard with other clients, instead of going through that process again, they just give consent to share the relevant data and documents, which we share with the compliance metadata. So it enables that completely compliant real-time onboarding process. in dealing with those alerts, we're generating unique data sets internally. So a key part of our strategy is ensuring that the way in which we are structuring data internally is providing us with data sets that we can ultimately use to train AI and machine learning models that add into our RegTech stack to add increasing efficiency and reduce the amount of human intervention required. However, this is a regulated space. You cannot regulate an algorithm, so this will always be supervised learning. But the key aim here is enhanced efficiency and consistency. So based on all of this, getting a little more technical, looking at our data requirements. So what structure we need and the requirement for distribution. So the schema that we're using is Snowflake, which I know is also a database, but as a pure relational data schema, we're using Snowflake, which has facts, dimensions, and subdimensions. And so an example that I'd pull out is a person. So we want to record a person as a data object, as a fact, and each person will have different dimensions. They may have a previous name, their date of birth will be a dimension. They also then will have an address. They will have a relationship with an address. It's important for us that we record an address as a fact, which again will have its own dimensions. Because if another person who lives at that same address then onboards, they also have to have a relationship to that same address, which is quite key for the integrity of our data, our ability for analytics. Again, this is just one example of a very fulsome data set, but why we need a relational schema, and specifically we've arrived at Snowflake. What this gives us is high data purity, so very highly organized, structured, with very clear relationships between facts, dimensions, and subdimensions. Key thing is it gives us very good ACID compliance. So obviously atomic, consistent, isolated, and durable transactions, where this is auditable data by financial regulators. It's a key function that we perform for our clients. The other thing is relational integrity. So having enforceable foreign keys, constraints, and schema rules enables us to ensure that our data purity remains very high, and huge efficiency in those analytics. So whilst having that very rigid and robust data structure, we can do very efficient complex queries and aggregations with joins across multi-dimensional data sets. So a great example of this in the real world is the recent Russian sanctions that were applied. And those were applied very differently in different jurisdictions. It would apply to residents of Russia, for example, in the European Union. And so it's not good enough to simply filter to everyone who has a Russian passport, because they may have residency in another country. So for the due diligence process, it was a good example of where over a complete data set, a lot of very specific analytics needed to be performed to then filter out where actions needed to be taken. And the scalability of our analysis. So repeatable analytical processes across these huge data sets that we're aggregating. A lot of these are very much ongoing. Key thing to remember is we're not just meeting compliance here. The aggregation of this data can give a huge amount of business intelligence as well. So the second very key requirement that we have in terms of our data is geo-partitioning. This relates to both compliance and performance. I'm sure many of you are aware of GDPR, and there are similar regulations, the California Data Protection Regulation, for example, that have been introduced to protect the residency and the integrity of personally identifiable information, basically sensitive personal data, belonging to citizens of different regions and jurisdictions. So to comply with those requirements, which is pretty important as a compliance service provider, it's necessary that we're able to identify and tag data as being PII. It stops being PII once it has undergone certain levels of processing. But where it is PII, where it actually needs to be for data residency requirements. It also enables us to enhance privacy and security. So reducing cross-border data transfers, obviously lowering the risk of breaches, and when applied correctly and using the right tools, reduces actually the potential attack vectors on that data. And very important as well is performance optimization. If we have a piece of analytics being carried out by a client in one jurisdiction or multiple clients across multiple jurisdictions, we need to be able to shard that data into relevant regions to enable real-time transactions and analytics to take place. We are, and I've used many words to describe us, we're compliance as a service, but at the very core, we are a data business. So in looking how we would approach this, we've been working on idclear for 4 years now. They started out with a lot of very complex legal and regulatory analysis, which I will not bore the DSS crowd with, but the requirement here was to ensure that we had very clear requirements that we were building against, because they need to be compliant with a very complex overlapping set of international regulations and laws. So when we initially built this, we had a design that was very much reliant on a single vendor. I've got one of our architecture diagrams from the original build here to the right. I'm sure it's not a mystery to anyone which provider that is, but a key challenge here is that we had vendor lock-in, so increased future migration costs. It really restricted our strategy, and especially from effectively deploying multi-cloud or a hybrid approach. That reduces resilience and disaster recovery options. Now, many of our target clients are highly regulated banks. Banks tend to be operating under a multi-cloud environment for these very reasons, for resilience, disaster recovery. And so it's very important that we mirror the principles that they have worked to. There's also a huge cost efficiency challenge with that. So we were locked into single vendor pricing, scaling models were restricted, and our ability to manage compute efficiently we found quite challenging. And another key component, we were using Postgres in RDS for our structured data. So Postgres, fantastic for relational data. Snowflake schema works very well in it, but it really limited our ability to scale efficiently. And so looking a little more closely at that in terms of Postgres. What we'd identified, and it wasn't bottlenecks that we hit up against, but it was through doing a lot of modeling with the clients that we are targeting and looking to expand into. And we were modeling what our compute cost would be, where we would hit any potential barriers, and we identified a number of them in terms of horizontal scalability. So right bottleneck in master-slave architecture, Postgres not having native sharding, the restriction of ACID transactions to a single node. There was a huge performance and latency overhead with a big operational and maintenance burden. And we know that there are different ways that you can work around this horizontal scalability issue, other than how our initial architecture was built, which was if you have multiple different queries that are challenging, you just pump a lot more compute under the entire database. Manual sharding that requires a lot of application level logic, and routing queries added hugely to our potential development requirements. Caching is another potential approach. It helps scale read operations, but it doesn't address write bottlenecks or ensure data consistency between the cache and the database. Again, challenging from our perspective for ACID compliance. We also looked at potential for read replicas and external transaction managers like Postgres XL, but they just add another layer of complexity and introduce potential bottlenecks. We felt that this really, for our use case, represented jerry-rigging. So we concluded the Postgres architecture, whilst optimized for vertical scaling, it had inherent limitations that made it not suitable for what we required, and something distributed by design was very necessary for all the reasons I've discussed. So we had an initial build, which as I think is a familiar trajectory with many companies in the early stages, we realized was not fit for our purpose. So we ended up actually scrapping that entire design and betting a lot of work that we'd done over a long period of time, and we rebuilt our technical architecture from the ground up. We had a full comprehensive rethink, said let's remove limitations and ensure that we are designing and building to meet the needs of our business, our vision, and our clients. So the first thing around data was looking at structured database considerations. So there are obviously many different database technologies and approaches. The first thing we looked at, as we had done a lot of work with Postgres, was potential solutions to solving that horizontal scalability issue. we started to look at other technologies. So one of them was CockroachDB. So it's distributed, designed for horizontal scalability and fault tolerance, which is great. It's got multi-region support and automatic sharding. The key challenge we found, it wasn't SQL compatible. There's a custom API with no integrated geo-partitioning. So we also looked at MongoDB with sharding. One of the big challenges we found there is the lack of ACID guarantees for multi-document transactions, which for our use case can be limiting. And again, very careful planning for consistent distribution was required. We looked at Cassandra as well. It has an eventual consistency model by default, which again, challenging from our perspective for point-in-time consistency and compliance. And it lacks native SQL support. And again, like Postgres, it can be adapted, but we saw this as better suited for non-transactional workloads. And then we happened upon Yugabyte, and we found everything that we had identified we needed. It's distributed by design. It's designed for both SQL and non-SQL workloads, fully Postgres compatible. So the extensive work that we'd done in designing our data schema didn't need to be restarted. And it has integrated geo-partitioning. So through that assessment, we realized that Yugabyte was the technology to progress with, and have been building with that since. So now I'm going to go into a bit more detail around the context. I've got some C4 diagrams. I don't know if anyone's familiar with ICE panel, but that's where these diagrams I've brought from. Not associated in any way other than being a big fan of their platform, but it's specifically for C4 diagramming. So at a very high level, so the environmental context level, we're existing within a cloud provider. Important to us that this is cloud agnostic, with our own virtual private cloud, and everything containerized within Kubernetes. Within that sits our ecosystem. So going to, again, another C1 level diagram, but the service context, hopefully you can see the similarities to the earlier talk through of how our service works. We have obviously the end user sitting at the top here, interacting with our data and services. We have client users, which need to be able to interact with the system, as well as client technology, then able to integrate. So a good example is a bank or an exchange that has customers. If we identify a high risk, they need to be able to quite quickly and automatically put holds or restraints on accounts. And so we need to have that integration facilitated. Within the idclear environment, we obviously have our own staff that are interacting with the system. And then we have these external providers. We have regulatory technology partners who are helping us facilitate a number of these checks and services. We have external data sources. So we have a huge amount of reference data that we use. So as an example here, if you're onboarding as a legal entity, we have information for every single jurisdiction on Earth of all of the legally recognized types of legal entity. And when you're doing these checks on a legal entity, you need to identify controllers and owners. And those differ dependent on the legal entity, and there are different risks associated with it. So in order to enable us to have these automated processes to identify who we're sending requests for information out to, and how we're building up this map of relationships within our structured data, we have a huge amount of reference data that we need to keep very fresh and up to date. As well as things like geographic risk data points. And then we have external technology providers. Obviously, that's a cloud provider amongst various others. Let's go a little deeper. If we go to C2 and the container view, this is obviously a lot of information in this diagram, which we're not going to go through in excruciating detail. But I just wanted to give a high-level view of that C2 view. And you can see at the center, we're using Temporal.io for data and process orchestration. Again, looking at with the principles that we needed to build under, and matching what we're getting from our data store technologies, where we're using Yugabyte for all of our structured data needs and Minio for our unstructured object storage. Key thing is this is a cloud agnostic architecture. It sits within a Kubernetes containerized environment, enables us to deploy across multiple providers. We're starting with one, so we're currently completing a full refactoring exercise. We've started within Azure, but we have the capability to scale out to any other cloud provider or multi-cloud. It's distributed by design. So we have that enhanced resilience with workloads across multiple nodes. We have multi-region deployments, and we have all of the disaster recovery and robustness that provides. The key thing is microservices architecture. So horizontal scalability needs to be across the board. If we have a complex process that's triggered by multiple users simultaneously, we need to be able to pump compute very great elasticity and be able to pump compute under required processes and sections of the architecture, rather than just throwing lots of coal into the fire and hoping for the best, which, as I'm sure everyone's aware, would be an incredibly costly way of managing a very expansive data platform like this. It gives us extreme scalability. So we are in the early stages of this business, but we have pipeline target clients who are extremely large with millions of active users who are globally based. The key thing is that this is highly scalable to enable us to scale to service very large clients without needing to re-architect our entire environment. And obviously, Kubernetes allows orchestration, so we have automatic scaling and load balancing within this architecture. So as I said, a very fundamental rethink, and it really aligns to all of the needs we have for our data, or our scalability, and our compute. So going a little deeper into some of the core components of that diagram, pulling them out and putting them in a little more visually digestible format of this presentation. We've got clients, client users, so that's going to be compliance people, business users, and their systems. Our core data platform relies on Yugabyte for structured data, as I've said, and Minio for object unstructured data. And we're orchestrating that using Temporal. We then have those external services and external data sources. So within our backend, we have an API layer, which is again through process orchestration, which is stateful and highly resilient processes through Temporal. We can interact with those services and those external data sources. An example of pulling data from those external sources that can then be processed back into Yugabyte. So we have the ETL, ELT processes and the restructuring of that data to meet with our schema requirements, and again interfacing with Minio. So an example here is we're getting a moving JPEG image of someone's identity document, through which we can perform all of those computer vision forensics to validate its authenticity. We're storing that within Minio, and Temporal is allowing us to, is facilitating us, ensuring that there's a really coherent mapping between that object data and structured data in that relational model that we require. And on the front end, we're using Angular, which again, through that API, it's interacting with the structured and unstructured data to present the portals to client users, also to end users. And then client users will also interact with their own systems, which again can interface with our data through that API layer. And so even for quite complex processes and queries and analytics, Temporal defines all of those and is the interface with primarily for data and analytics Yugabyte in order to present that. So this is what we are currently building and launching with. It's been a really exciting process. But what comes next? So one of the key components of our roadmap, in addition to the integration of generative AI, so large language models and very much self-hosted and trained on our own data sets, also looking at graph analytics. So graph is a database technology that we considered around our data, but again, I won't repeat all of the specific needs that we have for data purity, but it does provide very, very powerful analytics. So a next phase is looking to cache in instance, a required instance basis data from Yugabyte into a graph database such as Neo4j, and then using a front-end graph visualization software to look at that. This is really powerful for things like transaction monitoring, identifying flows of funds, and also complex relationships. For anyone that's not, I'd recommend there's a very interesting website called Offshore Leaks, which uses graph visualization to identify relationships between multiple different parties from things like the Panama Papers, which gives a really good example of how in the service that we're offering, being able to visualize those embedded relational structures in a dynamic way is very powerful. So yeah, thank you very much for the opportunity to present. If anyone has any questions, I'd love to answer them. So please feel free to provide those in the chat.